Hey, hello everybody. Hello X. Hello YouTube. Yeah, Bon, I hear you. Another crappy day is right, especially for these funds. I was just looking, or especially for the ones I invest in anyway. Maybe other people don't invest in the ones I invest in. There's a few of them that are up. It's not all bad news. I mean, we're going to definitely look at both sides. But yeah, I hear you, Bon. I hear you on that big time. I was just looking at the diversified divas, and they're all getting murdered. We won't even talk about them right now. Um, let's do this instead. These are the good funds. Let's start on the positive note. So, right here, and I just pulled these a little bit ago. I mean, like 2 minutes before I came on. So, anyway, of course, crash and dips. Okay. But anyway, whatever. But XOMO, I don't have any of that. Uh, Fiat, of course. Winter, of course. GDXY. Look at old GDXY. That's something else. That's resilient. And look at this one, BRKW. I mean, this is like the opposite of a high yield fund. You know, these guys, I mean, they're buying growth stocks and good and I guess they turn it into a yield fund by selling options on it. But anyway, you get my point. It's kind of like the antithesis. So it would make sense that it's up today on a day when all the high flying stuff is going to be down. And look, of course, Murney sucks. Abney, RNTY, maybe because it's real estate, Y triple Q. I hate to see that. I'm glad I have a few shares, but I hate to see that though. I don't want this one to be on the good chart. Where's Salty is? Why is Salty not on here? Gosh dang it, Salty. Salty should be up more than Y triple Q on a day like today. I'm not going to worry about it. Who cares? Anyway, but IYRI is from Neos, real estate based. MSFW, Microsoft. It just seems like it's Bitcoin that's down. You know, Microsoft, Airbnb, Moderna, Berkshire, gold is as far away from Bitcoin as you could get. Netflix, you know. So anyway, but there is some good stuff. And if we go and look on a week, if we look at a week, there's all kinds of good stuff. All right. Dibden Degenerate and Langford. Hey, thank you for being here. But yeah, no, it has been. It has been. In fact, let's just look at this chart. I was looking at this chart earlier. Doesn't inspire a lot of confidence either. This is the chart of the SPY. I mean, it's not the worst looking thing I've ever seen, but then let's look at the Qs. I mean, that's just not the greatest look. Let's look at Bitcoin. I've just seen better looks. I've seen worse. Buy the dip, baby. This is the key right here. If this chart holds, I think the other ones will also. We'll see. We'll see. Anyway, yeah, I know it. I hear you. Okay, so let's go. Okay, we've talked about the good stuff. I tried to start with the good stuff. There is a few ETFs, even in the high yield world, that are doing all right today. Not many of them. Let's go to the divas because WPay is basically a diva. WPay's, you know, I'm definitely studying WPay in here. So anyway, it's one of the first things I look at on here. It could easily be a fifth diva. I could easily put WPay up here. If I did that, I'd probably have to put YMAX up also or something. Anyway, it's fine. I think it's fine with four main divas. All right, but yeah, man, this one is ugly today. I mean, ULTI down 4.26, and they're not hedged. just for whatever that's worth. I mean, ULTY down the least of any of the divas, and of course they're hedged, but they're always hedged. And then blocks and K yield have some hedges on here and there. All right, well, but yeah, WPay. Look at WPay. WPay was down there. I mean, yeah, down 2.7. You know, you can compare WPay with the Qs 1.5. It's 20% leverage, and it's on some higher, some more volatile stocks than the Q. So it's probably in line with what it should be. But even old QLDY, look at QLDY getting hit for 1.91% today. Yeah, it's an ugly day when even QLDY is down that much. I mean, the Qs are down 1.5. It's just, it is an ugly day. But then you go back since inception and QLDY, so this is now 6 weeks. QLDY has a reasonable return of negative 511. You know, especially when you consider the Qs are only down 4.2. But yeah, WPay over the same time is down 14. I hear you. We just need the market to turn around. All right, so on, that's an old one. It's this one. On earlier today, Iron was up. That's how I knew that was an old one, but Iron's getting killed right now. Iron's one of the biggest ones that's down, and Iron and New Scale Power are down big for ULTY. Lamb Research is also down big. They have a winner or two mixed in there, but their average stock is down 1.9, and ULTY is down 1.7. And these guys, yes, these guys have hedges on everywhere, just like always. All right, K yield. These guys right here, everything's pretty much down for them other than Reddit. Somehow Reddit's up today and GDX. I think it's awesome the GDX is up. Let's go look at that chart. Heck yeah. Heck yeah, GDX. Trying to think about what's a more impressive looking chart, Google or gold. Google's pretty impressive looking, not so much lately, but has been. The best gold one, of course, is this one, KGLD. Heck yes, KGLD. It hasn't seemed to turn down as much as GLD has. Anyway, all right. Well, but yeah, I hear you on that WPay. So back to the divas here. So K yield, K yield's getting hit today. Blocks is, their average stock is down 2.1, and they're getting hit for a little bit harder than that. And what kind of concerned me is ULTI. These guys at times can put collars on their trades. Like, see, they have this TerraWolf down 10%. They could, at times they'll put a collar on down here, and what'll happen, they'll have where it says puts, it'll be twice as many as how many calls there are. So it'd be whatever that is, 514 or whatever that is. Whenever you double that, whatever that equals, for the put, and then your other leg, your other 2 or 3 legs. I mean, it can either be 2 or 3 legs anyway, and they do that sometimes. But right now they don't. They just have single tranches. So it's the single tranche is better than no tranche. The single tranche it helps keep the margin in control for the on the one they sell. It does the single tranche limits the max loss of the sold put. So it's not like it does nothing, but the stock is still free to drop as far as it wants to drop. If you do a double tranche, then that eliminates the stock dropping. You turn it into a collar. Anyway, they do it sometimes. They don't do it sometimes. They don't have any of that on today, and they're the worst performing one. I'm not saying that's why, but but yeah, look, they're even doing worse than blocks. I mean, and that's saying something. But still, forget about all that. If you go back and look at it for for the month and a half, it's not looking great for a lot of these. ULTY is down 20%, blocks is down 27, ULTI is down 36, K yield is down 12, W pay is down 14. QLDY is down 5, which actually looks pretty good. LFGY, GPTY. Mayor, what are you saying? Since you liked ASGI, I got another one for you, quite similar, MEGI. And I don't know if I liked it so much, but you guys liked it. I liked it because you guys liked it. So because you guys, a lot of you guys had heard of it before and whatever, and then it did well and it won. But yeah, I liked its performance. You know me, I'm a numbers person. Show me the metrics. So this looks like some kind of BS infrastructure, megatrends. Come on. It doesn't say the word income in there. It doesn't say the word alternative. I like ones that say alternative income, premium alternative income. Anyway, I'm just joking. All right. Maggie, all my premium alternative income ones are doing terrible today. So what I know. All right. Yeah, it goes up and to the right. You gotta like that. I mean, yeah, 11% yield. I'll put it on. I don't think we had closed in fund Friday last week like we were supposed to. Or closed in fund Thursday. I thought we were supposed to do it on one of the days. But I'll put it on. That's a good one. Hey Froggy, how are you doing? Yeah, I hope they do too. I mean, so with those guys, with Alti and stuff and with blocks and stuff, it's always like, man, they invest in, super crazy stocks. They're going to move down a lot more and move up a lot more than the index does. But with this one, with QLDY, they just invest in the index, in the NDX index. And so they should move 1-to-1 with the NASDAQ, basically. I mean, which is when they're pretty dang close, which is, but they still need the NASDAQ to go up though. But yeah, I hope it recovers too, JT. Anyway, all right. You need some theme like ASGI, slightly less good. I hear you, Mayor. I hear you. Yeah, K-Silv was up big today, man. I love to hear that. K-Silv was killing it yesterday. That's the I mean, my K-Silv and K-Gold are doing well, but I mean, I have blocks. I have Alti. I mean, I have K-Yield, which hasn't been doing great. So anyway, those are weighing on me. But man, this one is just doing great. And I have this QLDY also, and it's been holding up better than the other ones for sure. But I mean, when the market's down, it's gonna take all of these down, or because mine are all NASDAQ, AI, DeFi, that kind of stuff. But yeah. But yeah, I hope it recovers too. I mean, it will. It's just a matter of need the Nasdaq to go up several days in a row, and to be up, and it can do it too. 2 or 3 days in a row, and then it will be enough positive that where the even though it's capped and whatever, it's partially capped, whatever, they'll be able to catch enough upside where they'll make up the most recent drop. Um, so KS2 had a nice distribution. You know what I was looking at last night is there is the trades for the Target 25 funds. Anyway, they're doing the monthly time frame, which I think is smart. Which I think is really smart. Let's do this. I wanted to check out KSIL. I mean, this thing is just incredible. All right. See, I put it up there with Silvo, and it's killing Silvo. What's another one to put it up there with? SLJY. I mean, I can put it up there with GDXY, just to have some other stuff to compare with. But yeah, this has been the darling of the moment. Can anything touch it? I mean, what about? I mean, what about just SIL, SLV? Even just SLV can't touch it. Yeah, man, Howard's got something going on, doesn't he? He's something else. Yeah, no, it is an early stream today. It absolutely is an early stream today. You think market rallies rest of the week? Metals might cool off a bit. KS2 is a disappointment compared to your regular SLV gains or KSILV. KSILV moves like SLV. It's amazing. Yeah, Howard's talked about how he does that. And I think the answer is leverage, but not a lot of it, like strategic leverage. Heck yeah. Heck yeah. All right. I'm trying to think if there's anything else we need to look at. I want to pull up something really quick. Let's go look at the past quarter, but on stock tools. What do you guys think the best performing one of the quarter? It's got to be Google. It's got to be GOOW and something like that. Got to be. Got to be, right? Well, we're fixing to find out. Yeah, tech is getting stomped on. Charles, correct. The market is not looking that great today. No, it isn't. Yeah, I was just looking at the diversified divas, and they're all doing terrible. I mean, even the so-called good divas are just absolutely doing terrible. So, let's do, or I guess we'll do 3 months. So Market Wealth Creation does some videos on metals. Does he or she? I don't guess I've ever watched Market Wealth Creation. Can you guys in the U.S. buy European domiciled stocks? Leverage shares is interesting. Yeah, leverage shares is interesting. They do lightning spreads also. I think our friends north of the border can buy that stuff like that. But I don't think so in America. I don't think so in America. Yeah, the fundamentals are still pretty good, but for whatever reason, I didn't even have CNBC on today. But they'll always find an excuse to sell it. What is it? It was don't they have a even though they don't have much data, the jobless number they do have was terrible, highest it's been in 5 years or something, and it's probably not even right. So anyway, oh, the targeted wealth creation guy, yes. Okay, I do watch that guy. I watch Bruce. I'll check him out. I'll check out his thing on metals. The energy consumption of data centers. I hear you. All right, let's see if we can get this to work. Okay, for the past month. Or no, this is not the past. Well, let's do 3 months. We haven't gone and looked. It's 254. The market's closing also. I have too many windows open. What's the SPY doing? Down a point. Gosh darn it, SPY. I mean, the NASDAQ is down 2 points, right? It was down 1.9 earlier. I mean, gosh darn it. Yeah, the market does not look so great. Well, but yeah, but hopefully there's just people that just looking for liquidity, and then people will buy it up, and it'll go back up here. All right, well, I'm ready for that to happen tomorrow. Hopefully it will. Hopefully there's buyers down here. Or if it goes a little bit lower, then people buy it and run it the other direction. All right, well, but I want to make sure we weren't closing on the lows of the day, and that's of course what we're doing. It looks like. Yeah, I mean, look at that. Let's put it on a 5-minute chart. So yeah, look at that. Close them on the lows of the day. That's never what you want to see. I mean, it's what you want to see when you have puts. If you would have bought puts at noon, you know. But anyway, oh well. All right. So yeah, let's do some stuff like that. So what were you saying? TLTW against HYGW? I've often wondered about that. Boy, TLTW just can't, it can't get out of its own way, but they both paid I was going to say the same, but they paid they started at the same price. They paid the same dividend about. One of them's NAV went from 39 to 22, and one of them's NAV went from 39 to 29. And of course, that made a difference. Jackson, don't even start. Don't even start, Jackson. Don't even start, Jackson. My neighbor's probably here. Let's just look back at the past year, though. That's kind of a long. That is a kind of a long look back period. Let's just go back to last December. Well, this is making me like HYGW, or yeah. Of course, it just makes 5%. It makes what bonds make, or that's on total return, but I think it is high yield corporates or in governments. I think corporates. All right. Well, yeah. The NAV on, I know. We're just looking at that. I know a WPay is tanking. I don't know what the heck. Now I'm doing well, Froggy. I am doing well. I just wish these ETFs were doing well. They aren't doing worth a darn. All right. All right, back to the quarterlies. All right, number one on the quarter, the Alti's just there because of the split. I wonder, there might be some other ones that are here because of the split too. Because I think Coney probably is also. Well, I didn't think about that. A lot of these are, like, I know, for instance, for sure that Alti's not up that much. And I know Coney's not up that much. It's just because they aren't adjusting the price for the split. Now on AMD really could be up that much. Let's look over here at AMD. Well, let's do it like this. No, so that's obviously also because of the split. So this was not well thought out. Oh well. What are you doing, Charles? You're selling puts in the the SPX 2 weeks out. Gotta love that cash settled, don't you? You got to love that cash settled. All right, 301. The market just closed. And the SPY looks like it's going out on its dead lows pretty much. Oh, well. Let's go. Let's look at the, let's do it this way. I'm going to forget about that chart. All right, I was going to pull the chart of the divas and see how they're doing in relation to their last low. which was back, it seems like forever ago, but that was just the 21st of November. So, I mean, not too long ago. Blocks is still hanging in there well above its most recent low, although to be fair, that's adjusted for dividends. If you unadjusted for dividends, they're still hanging in above their recent low. But not very much, not by very much at all. So now let's look at ULTI from Rex, and they have already taken out their most recent low. So I hate to see that. Let's look at ULTY from YieldMax. They have also already taken out their most recent low, with the caveat that's without dividends. That's just on price. With dividends, they're barely holding above their most recent low. And let's look at blocks on the same manner, just so we can. There's blocks, same comparison. Alt I was not looking. Yeah, Alt I is not looking great on a comparative basis. And then let's look at K yield. Now, K yield to me, just eyeballing it, looks like it's the furthest ahead of its most recent swing low. You got to like that, Howard. He knows what he's doing. Hey, I'm glad you're liking NLSI. Well, that's awesome. That's awesome. I have 3 days of trades downloaded. I mean, I could almost guess their dividend. I have all their trades downloaded for the past 3 days, or the first 3 days. I didn't do like yesterday's though. But anyway, I was just trying to figure out what they're going to pay. When are they announcing their dividend? It'll probably just be monthly. It's not going to be a big deal. So anyway, but I'll be interested in it. I think it'd be great if they could pay 12 to 15% and have a really good long short portfolio. You know, that's what I'm hoping for. Well, good. I'm glad that it stayed positive today. Yeah, tech did get smoked today. Maybe the long short aspect will come in handy on days like today, or it's anyway. All right. So Mayor says, Max, what would you choose for a hedge income fund in case the SPY tanks? I kind of did a video about that, but a hedge, but end for income. Well, I don't know. Let me think about that. I mean, I want to say salty and YQQQ, but the market, you know, and mix that in with some other stuff, but that's not really what you're asking. I'm really excited about this B hedge. It just hasn't come out yet. But what about something like, but you say income, what about something like RSPA? So they pay monthly, but you see the NAV is that's with dividends factored in, of course. Let's turn off the dividends. It still looks pretty good. Even with the dividends off, it looks great. They're trading right about where they started trading. They've gone up, they've gone down. But that's with dividends off, of course. But yeah, maybe something like, if you mean if you want to still be in the market, maybe something more defensive like that, something like that, or maybe QQA, or maybe one of the State Street sector funds in a real defensive sector. one of those sectors does well if the market goes down, utilities or something, or so. But I'd say right now that RSPA or double QA, something like this, that right there is dividends off. That looks good, even dividends off. You factor dividends in. I mean, but look at this. The market's on a real, if you look at this for the market, which is the equal weight Qs, well, but this is an income fund, though. But anyway, whatever. You look at this, the market's right at the 200-day moving average. If it gets underneath that and stays underneath that, that leads to conditions like April and March and April. Hopefully that doesn't happen. If it fakes out underneath that and comes right back above, then it leads to buy the dip situations like like 2 weeks ago, whenever that was. Yeah, 3 weeks ago. So yeah, that's probably what I would say. But I would say when the B hedge comes out, it might be a good one also. There's people out there that still need money coming in and still have, let's say they're on margin, like that guy Todd. I think he's doing stuff like 2/3 alty and 1/3 salty, or half and half or whatever, just to be totally hedged, but keeping the money coming in. You could do something like that, but I say maybe just use some of these, maybe get out of some of the risky ones and into some of the equal weight ones, or you could even do something like JEPI, which is good because it's a value. It has a value philosophy, and who knows? I mean, it can be a little bit better. Yeah, PFIX. PFIX is not the worst idea I've heard either. And then of course don't forget about Riser, RISR. These PFIX and Riser make money when other funds, fixed income funds, lose money, and that's when interest rates go up. And that's what happened in 2022. Interest rates went up, but this PFIX made hella money. But if I put on a regular type of fixed income fund, it's the opposite. It loses money when rates go up. It loses NAV. The fund becomes less valuable. But yeah, that's a good one right there. And specifically it's related to interest rates. Now, interest rates aren't the only reason to make the market go down, but interest rates going up, and that it is one of the big determining factors. But there can be things that don't have anything to do with interest rates that can crater the market. If you had something like like Riser or PFIX, it wouldn't really help you. I will say this: I like the way PFIX kind of went up and down. Riser just goes up and to the right over time. I mean, do your own research. This is a complicated thing, an interest rate hedge. I mean, but I'm trying to put them on the same scale, but I think they are. I think that PFIX is just a crazier fund. I mean, it does way better, but in any event, yeah. Yeah, I figured it was equal weight. And because I thought that was the whole deal. If it's not equal weight, it's based on an equal weight index. I looked it up one time. It's been a while. Is TLTW is good? It depends. that markets go down for different reasons. Um, some markets go down because of inflation, and so yeah, then gold is a great hedge. Some do crazy things because of interest rates or whatever, and then bonds can work out depending on what you do. And some just happen out of the blue, kind of like COVID did. So so you never really know. Sometimes, in other words, they always talk about 60-40 bonds. Well, there's times in the past, like recent past, like 2022, when the bonds didn't help you out at all. In fact, it made you lose more money. That I mean, that stock bonds relationship that everyone talks about does exist, and it's existed for the past 30 years. But then you go back like 130 years, 200 years, it's not there. And it's only existed during the time of money turning on the money printer, or something like that, or something like that, which I could see that. So, but anyway, um, but yeah, but on that one, yeah, TLTW, I wouldn't think of it as a hedge type thing. Here's the best. I think this is the best thing I've come across. If a person's really worried about it, I mean, something like that. There's funds out there. There's one from Amplify called Swan. Now, it's not income. We'll think of an income one. For income, you may just have to use a long short combo or something. I don't know, but on but on your portfolio, I like the idea of Synth and Swan. Swan's from Amplify here. In fact, I'm just going to show you this. All right, so let's look at here's Synth, and they hedge, but not by buying puts. They do it in a totally different way. Um, they do it, and they use the leverage to hedge. It kind of reverse 5D chess. So check this out. So Synth is creating synthetic equity, and then it's keeping most of the account in T bills because they're using the leverage to create the stock substitute. So that frees up lots of cash, and they have T bills. Well, between the stock and the T bills, these guys are outperforming the SPY. I mean, that's impressive, not by a whole lot, but I mean, and they don't pay a yield. But I'm saying, if you think the bear's coming, something like this, because these guys are just basically a buffer fund. It's a different than buffer. Synthetic equity sounds cooler, and it kind of is. Buffer, you sell upside to cap your downside. You put on a collar. Well, synthetic equity, you have no upside cap. So, and you can see right here, he goes up just whatever the market does. So it's, synthetic equity. So you have that choice right there. So this is what I would recommend for somebody worried about bear. But and then we have, they Amplify does the exact same thing. They have one called iSwan, which is international, and one called Swan. But you can see here, their holdings are mostly T-bills. They have a few options. They have a synthetic long, so they have exposure to whatever they're supposed to have exposure to. In this case, they're supposed to have exposure to international stocks. So, and you can see I think they have a really good track record. So watch this out, or check this out. So let's compare Synth to Swan. Now, the one I showed you was iSwan, but I bait and switched you to Swan. But Swan is the same strategy, and it's a glorified buffer fund. The most you can lose is anywhere from 10 to 15%. And other than that, that's you can't lose. The rest of your money's in T-bills. So it's really for a deep pullback. It won't help. And just a little pullback, it'll go down. It won't help. or it shouldn't. We can see right here that Swan did kind of look like it helped in this pullback versus Synth. But in any event, um, Synth is just looking tough here. And then, but they need to make one of these that's good for pay. Um, all right, so here's Synth for Swan. Anyway, those are good looking funds. You could do worse. Yeah, I mean that. Yeah, it'll definitely. There's this strategy's been around forever. There's a name for the strategy. You use leaps to. There's been a lot of white papers on it. You use leaps to replicate stock. I read a really good white paper called "Leaping Something," leaping for profits or something. But anyway, it's been around for a long time. Yeah, in like 2008, when the market was off 40%, this strategy was off like 5%. 2007, this strategy performed very well, or 2020, this strategy performed very well because you just had a call option. So even though the market dropped 30% real quick, your call option is just like, it's 8 or 10% of the whole account. So yeah, you lost 8 or 10% when the rest of everyone else was down 30%. But not only that, bonds also performed well during COVID, and there was some flight to safety or immediately after that, and the COVID dip barely happened. So yeah, it's a legit strategy. It's a legit strategy, but in theory, the market could sell off 29% in a year. Yeah, no, exactly. And I'm not talking about SBAR. I'm talking about other stuff. But yeah, SBAR, in fact, SBAR's guaranteed, as far as to make money, I think you're guaranteed to get your principal back on SBAR. If SBAR goes under the barrier, the other side doesn't have to pay you your interest. That's why it's like, I mean, but that's the way I understand it. But the thing is, SBAR's NAV will start to will go down in value if it gets close to that 30%, even though it's guaranteed to get all its money back. And it's just not, even though its NAV will become less valuable as it gets closer to that barrier. Because once it gets under the barrier, then the other side doesn't have to make payments on it. It doesn't have to make yield payments on it. So, but yeah, I think you're guaranteed to get your money back. But yeah, so SBAR, I mean, just know that SBAR's price will still trade freely, and if you get close to 30%, SBAR's price will go down. Even though you aren't going to lose any money in theory, you get your money back. And I'm getting SBAR and CAIE confused. They're auto-callable bonds, but it's the same exact mechanism. But what I'm more excited about is these ones over here that take a portion of your money and just buy a leap, for a year out, and spend about 10%, and then and they do that every quarter or every 6 months, whatever, every quarter, do that every quarter. And even if the market crashes, they have 10% of the portfolio. It doesn't, because that's all they own is the option. But if the market keeps going up, these options are generally 70 delta. So you get generally about 70% of the upside. However, it's not capped though. I mean, and it can be more than 70%. You can see in this example that we were looking at it, so that's what I think is really interesting. But there's a jillion ways to do it. There's funds that do callers, but I just like the idea of this Synth and Swan lately. So anyway, all right. Yeah, I mean, I don't know what else there is to do. I mean, and even on YQQQ, it's not, even when the market goes down, there's plenty of days it rips the other direction. I think you'd want exposure on both sides. Um, and that's probably what I'll do. If we do get in, we aren't anywhere close to getting in trouble with the market. But if we did get in trouble, I would boost my synthetics to 30% or something, 60-30 or 70-30. I mean, I know how to add, but um, 65-35, whatever, something like that. But yeah, Espar could definitely be a good one. I know you guys were talking about SBAR, and I was talking about Synth and Swan. But all right, if SPX sells off 30%, buy more SBAR. Yeah, well, that's the thing, because SBAR, what they do is they don't just have all their barrier options at the same price. They do a fresh barrier option every week. So yes, after SBAR sells off, those barrier options are 30% down from there. But the barrier options they were doing 2 months ago might be in trouble. But that will all come out in the price of the NAV. The market makers, I mean, these don't really trade freely. The market makers give them a price, but the market makers know what they own, because the market makers are the ones on the other sides of these trades and these strategies. So, I mean, yeah, SBAR loses like a regular stock once it drops below the barrier, but they sell more. Yeah, exactly. And so the fund doesn't even lose money, is the right, but it's an opportunity loss because the bondholder or the party on the other side no longer pays the yield. It's a real thing. It's like on the last day of the month, if it's under the barrier or something, yeah, then that month the other side doesn't owe you the yield on it. But yeah, they have 52 of these because they're laddered out. Okay, but so there's some that won't be in any trouble. But if one of them's in trouble, there's probably another 5 or 10 that were put on around the same time. But when the market was higher, now it's dropping. So, but yeah, absolutely, no, absolutely. I know, CAIE is a very similar strategy. They need to make the barrier ETF for dummies. I just recently was able to figure it out where I could even explain it to people. If VIX hits 40, buy as much SBAR as you can afford. Heck yeah. Sold all your ULTI and bought K yield and NLSI. Actually sold everything with Rex shares today. So you dumped anything that had Rex in it. Anyway, I hate that ULTI didn't work out. I hate that. I mean, it has. Oh yeah, I made something cool for you guys too. Anyway, but ULTI, it has. It's been picking up assets. I guess it's at 8. Okay, well, I mean, K yield needs to have more assets, and it sounds like you sold your ULTI to buy some K yield. I imagine other people are doing that. K yield has 19 now. Blocks has 204. I think Blocks had more a week or two ago, and ULTY's assets have been going down. They had more. But yeah, this is probably the end of the day performance. So, I don't want to always seem like I'm picking on ULTI. I mean, Chippy was down 3.36%. WPay was down 2.65, which is more than any of the divas except 2 of them, except Blocks and ULTI. But I mean, and really ULTY, for all its other faults, is the least diva-ish acting today. It was down 1.6, but the market was down 1.6. So the callers, whatever they did, their strategy's working today on the downside. I mean, you can see what they're doing. They're buying stuff that's not tech stuff. So they had Southern Copper, and that's up, and Alcoa's up. Their metals are up, And then K Yield, kind of the same thing that K Yield does. They buy stuff that's not tech, although they got shut out. Everything they have is down today except Reddit. But on not tech, they have gold and silver miners. And then they have some defense contractors. It's Howmet Aerospace. I don't know what Vistra Corporation does, but come on, down 7.59%. You got to be kidding me. Look at him, it's down 4.19. Come on, guys. Bitmine immersion down 6. I mean, I love how this can compute the weighted average, and it can compute the weights and then how much it's down. And it can tell you, not figuring the options, but just figuring the stock. We know what the percentage is and what it was up or down, what it should do to the fund. And you can see the K yield. I mean, he's down about what he should be. I mean, he's not catching a lot of extra downside. Like blocks, let's see what they're doing. Their average weighted return is 2.1, and they're down 2.6. And then we have ULTI. I mean, ULTI is just getting, I mean, it has Bloom Energy down 12, and TeraWolf is down 10. Applied Digital is down 7. My gosh, just getting murdered over here. Anyway, but you can see right here, average weighted stock was down 3.9. ULTI's actual returns down 4.2. So, yeah, I agree with that. FEPI has a good one. It's been around forever too. Has a great record. You set up a watch list at 15 of the underlines, just buy dips, long shares directly. Yeah, you do that too. You like GPTY and LFGY better? I had both of those, and a lot of them, and I sold every share I had because what was I thinking? I mean, I was thinking right on LFGY, but on GPTY, I wish I still had it. But I guess on LFGY, I did well. All right. ULTI keeps messing with it. Yeah, and it's not only them, it's also it's K yield, right? I do like, I'm glad that that this has been working out better. This is a nice resource. Bloom Energy, oh, I guess they dumped it, which is good. Oh my gosh. And Howard is a sharp dude. Well, no, he still has it right here. He's long a call and he's short another call. That's fine though. Oh, that's right, because he doesn't have stock. He owns it synthetically, which I pointed out a million times. Doesn't need shares, he essentially has shares, but wishes he didn't probably. He has the 50 strike calls on Bloom Energy. And all right, 50 strike calls on Bloom Energy. All right, there it is. So, I mean, that's not helping him out at all. The 50 strike call, he's going to feel every bit of that loss. What was it down today? 12 points. His option was down 10 or whatever, probably. I don't know. It depends. Anyway, Bloom of Doom. That's right. Oh my gosh. Oh my gosh. Yeah. So, okay. Let's go back to that. So it looks like, old Howard has it 24 times. Now, granted, he sold 24 calls that out of the money that are going to expire worthless, but, it's going to be a pretty big size loss there. So let's see who else has it. Not those guys. ULTI, they have shares also. They have 5% of the fund in shares, so then let's see what they did as far as options. They have their 4-leg overlay. And that's what I'm saying. If to double it, All they would have to have is one of these would say 86. This 84 strike put, it would say 86. And it wouldn't be the be all and end all. These things can still lose money. I mean, and they were doing that a few weeks ago, but I bet they wish they had done that on a couple of these. But I mean, because not a one of them is doubled up on. So they're all full steam ahead. So anyway, hopefully they're right though. Hopefully this is just a 1 day little pullback. But I mean, Bloom Energy's down. They also had Nebius down 6, Oklo down 8. I mean, Serve Robotic, SRVE. Have you guys heard of that one? Yeah, it's uncapped both ways. Good point, Randy. Nanonuclear, Iron, Cypher, Clean Spark, Applied Digital. I mean, their average stock in their portfolio, when you factor in the weighting, is down 4%, and they caught 4.2. They caught a little bit more than average. Yeah, it does. Well, it does. Look at it this way. Okay, this is what Alti does. This is not leveraged. This is they own stock, sold a call, bought a put. So what they're doing is they're just playing the market between 280 and 312. They make or lose money just like the market does. However, they do the whole thing for a credit. So they take the little bit of credit and use it to pay the yield with. Okay, so that's the old-fashioned way to do it. But kind of the newfangled way to do it would be to all right. I was trying to show a lightning spread, but a lightning spread actually is leveraged. I guess we could simulate a lightning spread by doubling up on the shares of stock. Yeah. Okay. Yeah. And no one's really, I mean, this is a lightning spread right here. It's the same strategy as a lightning spread. So in a strategy like this, you're actually double long. So leveraged, in other words, between the two strikes, between 312 and 280, not in the ULTY strategy. The caller strategy, no, you aren't leveraged. You're single long and you're fine. I mean, that's fine. But when you do it as a lightning spread where you own stock and you aren't capped on the upside or the downside, with the lightning spread, you do it like that. And then you're actually, because you're long through the put spread and long through the shares. So that should count as leveraged. Now, on what ULTI is doing, same rules. It should also count as leveraged between those two strikes. But you can look however wide the put strikes are, and it is leveraged between those strikes. I mean, so I'm agreeing with you guys. It says as part of the strategy on I look at their website every day. It says it is, and it can be, but yes, it's not a part of their daily strategy. No, not at all. Not at all. Yeah, it sucks for a bear market. It doesn't look like. Yeah, I mean, yeah, I don't even know what to say. I mean, let's look at one of their trades. But yeah, so these are leverage, but they don't have to call them leverage, but it's tactical leverage. So let's look at we have a K yield open. We have ULTY. I just don't have any ULTI. Let's look ULTI. Okay. Credo. I was just trying to show kind of their typical trade. Okay, but anyway, so their typical trade is this four-leg monolith. Um, but yes, they're actually, I'm trying to think, they're double long between 145 and 177 and a half, maybe double long for the full width of this thing. But yeah, this thing affords these guys a lot of leverage. But they're definitely double long because they have shares and then they have a put spread. And the call spread is sold, so yeah, they're double long from 145 to 177 and a half. It's if they're leveraged, but only between those two prices. Then beyond those two prices, no, it's just as if they have stock. So anyway. All right. So the strategy, yes, alt I don't know how they could not how they can anyway. There, I guess, yeah. Their strategy is not to hedge. I mean, they would tell you. They say, "Well, we have this put." Um, I was trying to turn it back on, but they would say we have this put, but it still doesn't hedge because they also have the stock. This put just hedges this put. The stock can still go to zero. But when they double on this put, it stops it stops everything at that price. And I wish they had that on, but if you look, I think they do have it on, and I think the puts are at 50 on Bloom Energy, and Bloom Energy is nowhere close to 50. It's trading at 76, or somebody has on this trade. All right, so these guys, okay, well, these guys have it on, and they aren't hedged, so, but their puts are at, I mean, their puts are at 84. Okay, well, but these guys over here, ULTY, does ULTY have it on? Thank God. They're okay. They don't have it on, but K yield or these guys have it on, and they have the 50 strike calls. So, but so with blocks, their whole portfolio, because they have lightning spreads, they're double long between the two strikes of their lightnings. See, it says 124 plus 124 minus 124. So on Coinbase, they're double long Coinbase from 240 to 250, 250. On Circle, they're double long between 81 and 84. You can just look down the line and you can see. Now, to be fair, they do something different on ETHA and FBTC. They sell call spreads instead of put spreads, but on their just regular stocks, they do put spreads. And although I say that, and there's a call right there at HUD. Let's go. Well, they do whatever they want. That's actively managed. Anyway, all right. Well, yeah, it looks like AI is cooling off. No fundamentals. I agree with that. Hard to make money in a bullish ETF. Picking stocks that, yeah, I agree. I agree 100%. Yeah, and they're picking bad ones, or they could pick them, but need to do an inverse alti or whatever. Yeah, and no cushion on days like today. I mean, because the market's down 2%, and the kind of stocks that any of these guys mess with are 2 to 3 times as crazy, and more as the market. So on a market down 2% or market down 1.5% day, I automatically expect these high yield ETFs to be down 3.5 to 5 to 6% automatically. Anyway, you vote on firing ULTI. Yeah, I know it. I know it. If everyone, I guess, if everyone sells it, there's not a market for it anymore. They'll delist it, but yeah. Oh yeah, firing UL. You mean taking ULTI down as a diva, man? I'm sorry. I mean, the reason they're a diva though is because they came out at the same day as K yield. I didn't know which one was going to be. One turned out good. It's just like kids. You got a bad kid, you got a good kid. It happens a lot. We didn't know that at the time. I didn't know I was going to have a bad kid and a good kid, but those are divas and in the comparison because they started, at the right time to run a comparison. What I really want to do is I want to there's a new one out that I want to throw into the divas, but what is it? We were talking about it yesterday. It's not the equal weight. There's another one. Oh, is it the Rex fund of funds or is Rex coming out with, didn't we talk about that last night? Is Rex coming out with anyway, but yeah, so the divas are going to be expanding. But yeah, they do need to delist it, and then I'll take it off the divas. But like I said, the divas aren't necessarily an endorsement. Yes, I do like blocks, and I do like ULTY. I mean, I do. I don't know what I was thinking on either of those, but I do. But on the rest of those, it's in there. It's in there because it's a good comparison. They're similar stocks, similar option strategies, and they started at the similar time. T-Boost, yes, T-Boost is exactly what we were talking about. T-Boost is 100% it. So, I mean, it's just not out yet. But that's, T-Boost. And then what I'm really looking forward to is Rex Premium Income. But the Rex Fund of Funds, I don't know what it'll be, It could be Rexy. I would just make it REXY or REXI. I don't know if they use I or Y, but use whichever one they use on their other stuff. Just make it Rexy. That would be awesome. Scott, you said you would sell ULTI last week and didn't. Oh, geez. Don't you hate that when you look back at something and no, WiMAX isn't a diva. I almost ought to make it a diva if we're going to do WPay as a diva, but WPay is not really a diva either. WPay is in there for comparisons. WPay or WiMAX cannot switch stocks in and out, so that makes them less diva-ish right there. They're kind of stuck with they're based on an index. They're not that they aren't cool and have some cool stuff, but they're not as hedge fundy. So. But they're good for comparison purposes. I mean, usually, even when my blocks and my ULTY is sucking, which has been most every day lately, usually my WPay is making up because I have some of that and I have some QLDY. Well, WPay, in fact, WPay is down worse than freaking ULTY is today. And also have K yield. Usually my K yield, my WPay, and my QLDY are kind of my voices of reason, whenever my alt Y and blocks is getting hit like it is today. Well, anyway. Yeah. I mean, hopefully the Santa rally is still in effect. I mean, I want to see a new all-time high in these things. I just don't see why we can't have a new all-time high in SPY and in Qs. I mean, I get that that's probably not going to happen in Bitcoin, but I just want us to get back in a bull market with Bitcoin. If you look at this line here, you know that this line is the 50-day. So as long as you stay above the 50-day, that, you know, the market's in a solid, steady uptrend. You know, when it gets under the 50 and then under the 200, we'll worry about that when it happens. But we're nowhere close. You know, not yet anyway. So if anything, it's hopefully just another little dip by, and then, you know, we'll be at 700 by January 1st or something like that. I hope so. I hope so. All right. So what are you saying there, Randy? You wonder if an LSI and add ULTI is a short sell. It's in your portfolio. Nice, nice. Roxanne is saying, I like blocks at this point. Yeah, well, that's the thing. I like blocks, but I realized that I probably shouldn't. I didn't realize, I really didn't think Bitcoin was going to do this. So yeah, that's why I'm not really that upset of myself for buying blocks. Blocks it's a good fund, and you guys know the story. You guys know the story. Yeah, but let's look. We didn't really talk about those today. Let's actually get out the old index buffer and let's get out the old index buffer feed, and 5E doctrine is still alive. Look at this now. Almost, Y-Spy almost passed him. Son of a gun, Y-Spy. What are you doing, Y-Spy? Y-Spy doubling the downside of the parent. I mean, that's leverage for you. Works both directions. On the good side, we had FIRS and FIRI up. And on the ones not down as much, well, they're all down. Maybe VYLD, which is a yielding one. It doesn't pay a yield though. It's a long volatility one, I think, or short. It's a short volatility. It's from Max, but anyway. And then we have ZVol. Over here in NASDAQ land, Chippy was actually down the worst. GPTY getting hit, as is blocks, as is ULTI from Rex, as is WPay. WPay getting hit worse than blocks. KYLD also getting hit. This is making ULTY look good. QLDY is down 1.8. And where is old ULTY? YMAX is only down 1.5. That's good. That's good. Here, GPIQ is down 1.6. Triple QI is a good one, down 1.7. JEPQ is a good one. I mean, lots of good ones in there. Then you have YQQQ and Salty. What are you doing, Salty? Only up 35 bips? Come on. Come on, Salty. All right, there's that. And then we can look at the Yield Max Buffer Report. Did we already look at this? Or no, that was this morning. Or no, we didn't even have a show this morning. Anyway, here we have it. Anyone outperforming the parent on the downside? Yes. AIYY outperforming parent on the downside, as is GUI outperforming on the downside. That is not good. As is OARC, as is MSFO. Wow, lots of outperformance on the downside. Snowy is almost doing it. Bobo is outperforming on the downside, as is Dizzo. Dizzo went woke. Aptly, I'm just joking. Aptly outperforming on the downside. And JPMO, lots of outperformance on the downside today. Wow. Where is NLSI? Yeah, I need to put, maybe I could put NLSI into the I wonder if I could add NLSI into the diversified divas. It's just as an understudy, just to study its movements and stuff. I don't know, maybe. And I was supposed to add something to the which one was I supposed to add to the max factor? There's one that you guys told me to, and I said I would add it. Yeah, here, I'll do that. Let's see, on the index buffer report, let's go to the data page, and let's put NLSI. Let's put it next to, yeah, good call on that. Good call on that. And we're going to compare it to the SPY. And it will be in there tomorrow. I mean, it'll be in there right now. There we go. I hate when it says in A. Did I do it wrong? In LSI. Okay, yes, I did it wrong. Thank goodness. Okay, there we have it. It'll be back. It'll be in there tomorrow. All right, Randy, what'd you do? You sold all your Cornerstone After X. Yeah, Granny. How is Granny not in here? Is Granny really not down here? I thought for sure. I thought it was down here somewhere. Granny should be down here. Right here next to IWMI, because Granny is smaller companies like IWMI. Yeah, good call, Marcus. Good call. Okay, those will be on there tomorrow also. Yeah, on this other one, the J, they don't pay a yield. So I don't want to just, I try to have these are just yielding funds right here, because that's the whole idea of the buffer fund. The yield is what kills the NAV, as you guys know. So we want, anyway, that's the whole, so these are all, I pretty much think they all pay a yield. Some of them not a super high yield. But anyway, yeah, GRNJ could be a good one. Could be a good one also. Heck yeah. Let's just do this. Depends on what you're looking for. One pays a yield, one doesn't. The one that doesn't pay a yield does better on NAV just because of math. The other one, the one that pays a yield, does better at paying a yield. So if you need a yield, it might work out. But if you need more money in your pocket at the end of the deal, you're probably better off not doing it. Anyway, small sample size right there. Small sample size. Yeah, no, I got you on that. I was just giving you a hard time. I got you on that. But no, it's good to have ones we talk about all the time in the T-Boost would be the Granite Nav. Yeah. Heck yeah. Heck yeah. I think SFAL's on there. I think SFAL is on there right here on data. And in fact, it is right. It is right. I curate this list myself. I've done it for more than a year. I used to know where SFAL is. Z-Vol, oh my gosh. Oh, no, there it is. It's right down here with the vols. ZVol, SFAL. VYLD is a new competitor. Now, VYLD doesn't pay a yield, so it really shouldn't be on here in the same way that GRNJ shouldn't be on here, but I just wanted to keep an eye on it. QUp doesn't pay a yield, and I hear they're going to delist it anyway. But FEPI and SEPI are good ones. I mean, I like this list. We get a lot of mileage out of this list. It's too bad Rob had to rip me off and make his own buffer report and make it fancy and make it work and stuff. Darn it, Rob. Had to rip off my intellectual property. I'm just joking. All right, guys. Well, I'm going to let you guys get out of here. We'll be back tonight for the for Wednesday, whatever Wednesday is. It'll probably be dealer's choice. Maybe we can even do State Street or something. We can have State Street night. Or maybe I'll do closed in fun night. Maybe I'll do something for you guys. Good tip there, Roxanne. Saying XLEI, good energy producer, gaining attention as diversification from tech stocks. Absolutely. So we have some good ideas out there. We have Swan, we have Synth, we have Swan, we have Double QA, we have RSPA, we have, what else do we talk about? But yeah, you could get in some energy, XLEI, little closed-in fund, something like that, a little GRNY, although that doesn't diversify you that much. But heck yeah. All right, guys, thank you for being here, and I will talk to you later.
These new incarnations, all those main changes